Well, good day, traders. And after a fairly upbeat US trading session where we saw the S&P close up 1.2%, front-end yields, two-year yields up 7 basis points, we saw a little bit of pricing out of rate hikes, or rate cuts, should we say, for September. The market putting down 18% probability we get a 50 basis point cut for that meeting. Certainly, what we're seeing as a result of that is a much stronger US dollar. The US dollar, if you have a look at the dollar index or the USDX on MT4, MT5, is pushing right up against that ceiling at the moment. It's really capitulating a lot of people's imagination of where this could go should we see a weekly close above that resistance level. Yeah, it probably would coincide, given that the euro has a 57.4% weighting on the US dollar basket, with the euro trading down into the low echelons that we saw back on the 1st of August, that put that swing down at 110.27. Yeah, the world is short euros. Obviously, the world's ramped up their expectations for that September ECB meeting, which I think is going to be highly critical. I'd expect euro dollar vols implied volatility to ramp up going into that meeting. We could see some bigger price moves as the market tries to understand exactly what the ECB will or won't say and what they will do into that meeting. I think that's definitely something to keep an eye on. But also just an idea about that dollar index, which is more sort of a more broad basket of US dollar. Now also have a look at the trade weighted US dollar. You can't trade this as an active currency, but is something people will look at very closely. It's something the Fed will look at very closely. That's an all-time high. There's no, it doesn't make a genius to work out that this is something that Donald Trump is looking at the moment. He came out with a tweet in the US trade session saying that the Fed needs to cut by 100 basis points off the bat, reenact quantitative easing, and effectively look at a situation where the dollar is becoming more of a headwind. Well, it's definitely becoming more of a headwind for emerging markets. What we saw last night was a slight subsiding of implied volatility. The VIX and bond volatility came down a little bit. We thought there was probably a bid coming into carry with the US dollar moving higher. People want to be in the US dollar as it is a strong positive carry trade. But what we didn't see is it spill over into the high yielding currencies, the Mexican peso, the Brazilian real, the Turkish lira. They were down against the US dollar. They were down against the yen, which is obviously one of the big funding currencies. So we're not seeing the re-emergence of the carry trade. And if you are seeing that, you've certainly been a bit in the US dollar. Donald Trump's trying to talk down the US dollar. No one's really buying it at the moment. The Fed seem to be on their own course at the moment. And what is a concern is this stronger US dollar and a Fed that sees a mid-cycle adjustment. They see the US economy in a mid-cycle. The market doesn't believe they're in a mid-cycle. They see it in a late cycle, and that's a toxic situation. Should we see the data really roll over in the US and across the world, it's already started to see some vulnerability, especially in the investment side, especially in the in trade. Then I think you're going to see high volatility re-encapsulate itself back in markets. But for now, the market is rejoicing on the idea that we're seeing central banks detail their game plan, what they could do, what they may do if we see a downturn. The talk is that we could see the Germans roll out a 50 billion euro or US dollar fiscal stimulus plan, potentially break their balanced budget, which I think is significant if they were to do that situation. The RBA today in their minutes, which hasn't really seen too much of a move in the Aussie, and effectively if you look at the FX chart here or the table, you can see that the Aussie is 67.77 up 13 points. Across those tables you can actually see a little bit broad US dollar weakness. The US dollar's probably come under a bit of profit taking through the Asian situation. But going back to the RBA, they've basically looked at, they haven't really given us any fault to suggest that we're going to see a September rate cut. But what they have done is they've explored the idea about what they've looked at with other central banks and their quantitative easing. And again, it feeds into the idea that the market is rejoicing short term that central banks are detailing what they could do to the market and what is the scapegoat, what is going to be the smoking gun, what could they get them out of the situation should we see a broad downturn in markets. The market feels that these central banks do have a plan, whether it's going down to zero interest rates, whether it's enacting a quantitative easing, where it's a combination of loose monetary policy and combining that with fiscal policy. The markets are somewhat happy that at least they are detailing that to the market at the moment. Now that will dissipate, and I think that will give us an opportunity to sell risk at higher levels. And certainly if you look at the S&P, which is kind of like the epicenter of my equity world at the moment, a move up into that sort of 29.47, 29.50 has been the top end of the range. If it can break through there, we'll turn a bit more bullish on these markets, but I think we'll probably look to sell into those regions there as well. Staying on the equity front, the ASX is doing quite nicely today, up about 51 points at the moment. BHP came out of earnings. There's been a number of companies that have reported earnings. We're in that meat of earnings season. The initial situation was it was quite poorly taken, and that did weigh a little bit on the ASX 200, but it's ramped up through the day. They came out with slightly disappointing numbers. The cost numbers, the cost revisions, the cost guidance was a touch poorer than what we were looking for, and the stock traded down to 35.64, but now it's come roaring back to the flat line, and that's taken the ASX strongly with it as well. Healthcare stocks really being buoyed up on the day. Not a lot to look forward to into the session. I think as we go through the week, we're looking at European PMIs, and of course looking forward to Jackson Hole, which we'll talk about in tomorrow's session. But for now, we're just waiting and seeing if the US can follow through some of that positive move we saw yesterday.